Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar continues to extend its gains overnight and inks in a fresh high of 71.94. Looking ahead, the Reserve Bank of Australia is set to its meeting for March the 5th. It's crucial that the statement we should be looked upon very closely, although the bank has stated that they are holding to a neutral stance. On the talks between China and the US, President Trump has now delayed his own deadline to increase tariffs on Chinese goods as his administration continues a month-long effort to persuade Beijing to make significant structural changes to its economy that have so far proven elusive. At the moment, we do have President Trump and Kim Jong-un about to meet. So this is their second summit, so we'll see how that all turns out. Looking at the technicals though, they're not overly bullish. And therefore, as we approach the region of 72 cents, I do expect to see sellers come back into play and fresh supply push the market back down to a target of 71.45 with 70.60 still in focus. Until we get a break of 72.40, I'm bearish. As expected, the euro did break through 113.70 and now exposes the region of 114.45 to 65. It is assessed from there that bears should come back in and support that level in terms of holding, and therefore should see a move back towards 113.35. I'm not bullish. I just feel this is an extension to the move up as the dollar weakens, as it currently holds around 95.86 with the objective holding at 95.40 before the rebound to the US dollar, and in terms see the euro fall back down to a potential target of 112.50. The dollar yen, as I feared, did not sustain the break of 110.95 and plummeted very sharply. From the technical points, and the failure of the upside break of 110.95 does bring in focus of 110.35 down to 109.70, which is still the preferred view, and reassess from there. Although I don't have a view on the pound, the market rallied higher overnight and now to a fresh 5-month high of 132.87. With the Brexit uncertainty still remaining, the market still wants to push the pound higher. At present, the technicals aren't in a good place to support any view, so I'd rather recline for any comments to the current pattern until we get some assessment from the technical pattern to support a direction that I feel is worth putting risk on. Gold still holding to a relatively firm up channel, and as you can see here, the market still locked in a range of 1,312 to 52. At present though, the market is still expected to challenge higher as long as we remain above 1,312 and look to targets of 32 to 36 to 43 and higher, with a broad target of 13.5. Wrapping up with oil, market did stage a recovery above that 55 level and was concerned that at one stage it may break, but the balls are still there and holding in. Do take note though that beneath 54.95 does give a very much sharp, considerable drop to $51 a barrel. So keep your stops in place to your risk management. While we remain above 54.95, I expect a recovery back to $58. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the interest rate report. I hope you enjoy the rest of the day that's ahead.